Hello everyone, welcome to Market Snapshots for today. Some very interesting things happening in the market. Like I said yesterday, for me, yesterday's close, that is Friday's close, was very important, and somehow I think markets have been favorable, both the markets, Indian market and the US markets. Let's look at the numbers. Nifty closed at 24,207, which is almost 1% above its prior close. Nifty 500 at 23,348, almost 1.16% above its prior close. Nasdaq at 29,825, 0.33% above its prior close. S&P 500 at 7575, which is 0.42% above its prior close. Advances to declines, I think very healthy rise here to two significant sessions wherein we got 400 plus advances. This is Nifty 500, 404 advances to 96 declines. New highs, 10 new highs and 490 new lows. So if you look, the market has been very contrary, right? We are getting 400 plus participants and still new highs are not getting formed. I think we'll have a very interesting data to where the markets are headed, why they are not getting the momentum required. And although the small caps, mid caps had shown a lot of strength, they are trading almost at their all-time highs, but somehow the momentum, which helps to build the market is not coming back. There are sectors which are, indicating where the market is headed actually. We'll come to that in the later part of the video. The breadth improvement for sure, but nothing significant or great about it, but for sure it has improved. Above 20 EMA 300 stocks, above 50 EMA 317 stocks, above 200 EMA 285 stocks. This is the chart for Nifty 50. Looked pretty good. I think pretty good recovery here. I mean, I think this session was very bad, and yesterday's that prior session also did not give any confidence. But I think this is exactly what we would have wanted. Nifty started exactly on prior sessions close and did not give away anything. I mean, it just remained there. The need of the hour is that it should cross this resistance here and then literally form a momentum, but we'll see to it why it is not able to form the momentum, required momentum. Nifty 500, much better looking chart, a lot of strength here. A breakaway gap, almost not much but a little bit here, but then overall structure of this market is good. Although the participation and breadth was very inconsistent throughout this week, and that is why the market has been losing steam, but we'll see to it what can be done better. Let's look at the summary for Indian markets, that is trend, participation and breadth for Nifty 50. It is bullish, trading above 50 EMA. Participation was mixed, breadth is mixed. Nifty 500 participation strong, breadth is strong. So overall, I think the liquidity is flowing towards small caps, micro caps, and mid caps. So, I don't think there is any guessing there. That is how, if you look at any of the smaller indexes, you will figure out that is where majority of the movement is happening. Nifty for sure is lagging behind, and we'll see next. This is the US markets. S&P 500, 340 advances to 160 declines. I won't say staggering, but the good part is it has been very consistent, so that's good. New highs 11 to 489, new lows here also the same problem, although consistent. Talking about S&P 500, consistent good participation, consistent good breadth, and still new highs not getting formed. I think there is a lot of broader liquidation happening even in the US market, and that is the reason a lot of steam is not coming in overall market. I mean, there are sectors which are doing really well, that is where liquidity is moving, but uh, it's not that overall market is performing very well. Let's look at the breadth. Very good breadth. I think again, improvement, consistency. 3 straight weeks wherein the breadth has been very healthy for the US markets. This is S&P 500 above 20 EMA 307 stocks, above 50 EMA 333 stocks, above 200 EMA 322 stocks. So I think very healthy numbers for S&P 500. I want to highlight this here, that this is restrictive to S&P 500. It's not that the entire US market is doing good. It's not that Nasdaq is outperforming Russell 2000. No, I think it is broadly S&P 500. This is what I have been saying throughout this week. This is the index to watch out for, because I don't see a lot of strength in other two indexes. Okay, this is Nasdaq 100. Again, a good looking, strong, bullish chart, trying to, converge somewhere here and then can go either way. It's a positive, good looking chart. But again, I think not very I'm literally not betting anything on Nasdaq. The reason being, I think the participation and breadth has not been supportive. For me, chart is just one component. If the data is not supportive, I don't take those bets. Even if the chart is looking the strongest, it doesn't matters to me. Uh, it has to be in relationship with what the data is showing. That is when I try to take my bets. This is S&P 500. I mean, just look at this chart. It is doing what Nasdaq is doing, but then the almost hovering near its all-time high, uh, with a combination of breadth and participation. So this for me becomes an undisputed champion between the three. Russell 2000, I think it was doing very, very well, and then now it has lost its esteem. People are not looking, I think, towards a small cap. I cannot say not looking because it is still a very, very bullish chart, but then I think overall the sentiments are with S&P 500. And the overall market, US market, Nasdaq bullish, participation mixed, breadth mixed. This is what I'm saying. Nasdaq has been primarily mixed or weak for its participation and breadth from last 3 weeks. S&P 500 has been very, very consistent about its trend, participation, and breadth, which remains strong throughout. Russell 2000 was doing well, but I think in last 10 odd trading sessions, it became, a little volatile. And that is why, a lot of concentration is on S&P 500. The global macro picture, the yields have again risen to 4.56. 4.6 is a very, very critical level for the yields. If that breaks out, I mean, I think we'll struggle big in equities market. Let's hope that that breakout doesn't happens. Dollar has again started rising. Like, it's not rising, but somehow it is maintaining the levels of 100, which is again not a very good news for the equities market. VIX is showing no signs of stress, that the overall markets and sentiments are good. So problem is, everything is very contradictory. We are seeing good breadths in S&P 500, markets are moving ahead. Then we are seeing yields are also rising, dollar is also rising. Like, it's euphoric actually. Like, I mean, there is no market wherein everything moves together. I mean, do you feel the market sentiments are as such? Like, there's a war going on between Iran and US, which seems never ending. There is a war going on in between Russia and Ukraine, never ending. There's a geopolitical shift. China is trying to overpower US. US tries to maintain its status quo. So, I mean, I don't think it's a very, very good environment, but it's still, everything is rising and such. I mean, I think it's a little chaotic kind of world, and wherein the equities are doing good, the yields are doing good, the dollar is also rising, and the VIX says everything is neutral. So, like, I don't won't say everything is neutral. There is a lot of things which are happening. It is just that we need to be a little more observant about what we intend to do, and thereby taking our bets. Looking at BTC, again it has risen, which again shows signs that market sentiments are little positive. People are looking to take riskier bets. Gold has not moved, I mean, by any inch in the last trading session, pretty much there where it was. Let's look at the dollar chart. Like I said, it is a very, very bullish looking chart. Uh, I mean, rising dollar not good for equities across globe, be it the US market, Indian market, or any markets in particular. Bitcoin again has started showing strength, again rising. If Bitcoin keeps rising, basically it indicates that the sentiments are coming back towards the risky products, and maybe this might give a kicker to the equities markets as well. So yeah, I mean, defensive products are also rising, risky products are also rising. So basically, we are not headed for a very good time, that is for sure. I mean, either of them will have to come down, because for sure everything will not keep rising. So we need to be little cautious. Gold, almost no movement here, pretty much where it was. So nothing much to discuss about here. It's going downways, sideways. Let's look at the top sectors. I think this is where the biggest takeaway for the week will be. This is the biggest indicator which tells where exactly the markets are headed. The Indian market and the US market. For India, it is health, reality, and banks. For US, it is financial, healthcare, and industrial. I don't know if you can like find any similarities what is happening, but I'll try to connect the dots for you. See, health is a defensive sector, reality is a hard asset sector, and banks are basically the financial aid to the economy. The lending is strong, just to keep the economy in good shape and keep it running. That is exactly what the US is. The US markets are also concentrated on financial, basically banks, the Indian counterpart. Health remains same. In India, it is reality, because we are not a very, big industrial kind of a country. We are not great exporters. So basically, uh, the alternative to industrial in India, the big investors have found in reality. So more or less, both the markets are headed towards real assets, defensive assets, which can drive the economy. So although, like, I mean, in the month of June, in India, the small caps, micro caps did very, very well, but they have struggled a lot in last 10, 11 trading sessions in the month of July. I mean, follow throughs are not happening, the breakouts are not working. Even if, their breakouts are taking place, they are fading away. And in the US market, Russell 2000 was the one which was outperforming, which is their small cap. And now I think everything, a lot of focus has come back to S&P 500. Nasdaq is not happening because I think a lot of investment has already happened on the semiconductor space, and people are trying to diversify. People are trying to, liquidate the gains they have made. So if we understand from this particular slide, it is that the world is moving towards little more defensive kind of sectors, and that is where we should be betting on. It's not that, you take anything and everything and expect it will work, because these are very, very strong indicators. They are primarily indicating that both the markets are heading exactly towards the same direction. The Indian market and the US markets remain correlated, but then the technology, the semiconductor space of US does not makes it 100% correlated. I mean, I would say the proximity is at around 60%, 65%. And if at that proximity, both the markets are, moving with the same set of sectors ahead, that means basically the sentiments are not very positive. And we literally need to make this into consideration before making our bets. So how I would go about it, either I'll get into the ETFs of these sectors if I want 100% exposure. And in case if I'm not looking for 100% exposure, what I'll do is I mean, I'll come down to maybe a 50-60% of my total bet size. If whatever my bet size is, I will not take bets more than 50-60%. That's I'm very, very sure about it. And that is how, I would go on. Because see, I won't say the markets are telling you that don't trade, don't invest. Definitely that's not the indicator. The indicator is where they are pointing. And these tell us they're pointing towards a very, very similar direction, which is little defensive. So for me, the go-to bets would be in these sectors with an exposure of 60-70% at max. Let's look what is trending in India. It'll be Phoenix Limited, OFSS, Nika, IKS, and RBL Bank. And for the US stocks, this is BK, XPD, EA, NSC, MTB. I think that's everything from my side for today. Like I said, there are good opportunities in the market, but literally you'll have to work little harder to get where the trend is, where the strength is, where the liquidity is. Uh, I think both the markets provide equal amount of opportunities, provided you are willing to put that extra mile. Just look what is trending, where the relative strength lies, which sectors are, what the sectors are indicating. I mean, people think just by looking at the chart, they'll win this game. Honestly, it's a very, very complex game. If charts were everything, maybe you can master charts in 6 months, 8 months, and you can make money. But it's much more than that, much beyond than that. It is not that price action is the only thing. I think a lot of data needs to be read, understood, and made for self awareness. Yeah, that's everything about from my side. Like, I mean, I'll just wind up by saying in the Indian markets, again, I think July is not indicating that small cap and micro cap are the space. I mean, money is flowing towards more defensive sectors. So maybe your Nifty 500 could be. I mean, I all this while I have been saying Nifty small cap, Nifty micro cap, but I have been saying about Nifty 500 as well. But I think at this point of time, the strongest looking chart is Nifty 500 for India. Same is the case with the US market. It is S&P 500, where most of the bets is. It's a good index, comes with a lot of diversifications into technology, semiconductor, financial sectors, industrials. I think that is where you should be betting on. That's everything from my side. I hope you all found this useful. Thank you so much. See you next time. Have a good one.